In this video, I want to discuss what real estate investors and also operators who are looking to purchase existing residential assisted livings need to actually look for, and making sure that they are dotting all their I's and crossing all their T's. So if you're interested, make sure to stick around. What's going on, everyone? I hope you're all doing well. If you're new here, my name is Serg. Welcome to the channel. To all my reoccurring viewers, thank you so much for all the love and support that each and every single one of you have shown me. If you have not yet, make sure to go check out the links down below. I have my mentorship call link down below. I also have Legion Assisted Living Academy, where you can learn how to start your own residential assisted living from A to Z. That program is down below. Also, you can check out valleyalfventures.com if you're looking to passively invest into the space, or you're an operator looking to potentially lease, or you are looking to sell any of your residential assisted livings or behavioral facilities. Let us know, reach out to us, and we'll touch base with you once you fill out the questionnaire. And with that being said, let's go ahead and jump into the topic of this video. Now, a lot of things have been happening in this industry, but the main thing that I want to talk about is there are a lot of people who are actually looking to get into this industry, especially with everything that's going on and the demand that's coming and that's already here. Due to the space and the fact that a lot of families realize that they need their loved ones placed in these types of care homes or even settings like residential properties. And so real estate investors have really been looking at this space a lot more and are considering it, but there's quite a bit of stuff that they're not realizing is actually happening when they look at a facility. And so a lot of them look just simply at a cap rate, right? A lot of these investors are coming from multifamily backgrounds. They're maybe coming from storage units, whatever asset class that they are in with real estate. They're looking at the cap rates that assisted living facilities are providing, especially these residential assisted living facilities. And so when they're looking at the cap rates, they're kind of blown away because a lot of cap rates have been suppressed, especially in the multifamily, and slowly it's starting to happen now in storage units and other asset classes like mobile parks as well. And so when they see anything above 10% cap rate, they're instantly intrigued, right? It catches their eye right off the bat. And the way capitalization rates work is you take the net operating income of that said property and you divide it by the purchase price, right? And then that gives you the cap rate. And so these businesses, depending on how they're actually run and how that operator is running it, they can really have a high cap rate. And with someone that I recently spoke with, there was a capitalization rate that they saw at 21%. Now, little known fact is that operation, the way that operator is running it is that they are their own manager, right, or administrator in that facility. So therefore, they're able to keep that labor cost alone down, right? A manager costs $3,000 to $4,000 per location. And so if they're their own manager, they're saving on that $3,000 to $4,000. They could just pay themselves $1,000, $2,000, whatever they want. But regardless, though, they are minimizing that. And on top of that, that same operator is also covering a lot of caregiver shifts, keeping her labor costs down significantly. So, when I heard that person has a 21% cap rate, that was something that's not realistic for most people. Most people are not able to go in there and operate it themselves, especially if you're the type of investor or the type of operator who wants to have multiple locations and not just be in one set location. So therefore, that cap rate is going to be suppressed a lot more versus that 21%. And so that is something I wanted to talk on, because a lot of investors or even operators that come in think that they are getting a really good deal, or that it's going to be run a certain way and still be able to hit those numbers that they were hoping for. And that's really not the case. And that's why I wanted to talk in this video strictly on that, because a lot of investors, when they're looking at this, you need to factor quite a bit of different things, right? The area that home is in, what kind of rates are they bringing in, how many bedrooms, how many bathrooms, what type of facility is it? Is it all private pay? Is it all tax or even Medicaid, for instance? All tax is the program here in Arizona. And so when you're factoring all of this in, it's really going to make a massive difference on what you're actually going to be getting out of that. And to my surprise, there's some people who just want to add things to their portfolio regardless if it makes them money. And there's nothing wrong with that. I personally don't invest that way. I personally invest in things that will produce me a return. I don't want to just simply hold on to something based off of just the appreciation of the value, right? And so depending on what your investment strategies is, you have to kind of nail that down and have a criteria. And so for me, if you're the type of investor and you're like me and you want a return on your investment and you want that money to be making you more money, not just on the appreciation, but even on the passive side, or even from the business portion, you want to make sure that you get these numbers nailed down. You want to run a proper pro forma. The reality is that, like in my previous video, I think it was the last one or the one before that, I talked about how a lot of these operators don't keep very good financials. They don't keep a very good bookkeeping. And the reasoning behind that is because they're managing it themselves. They're operating these things all by themselves. They're taking care of the residents themselves. So they don't have the time to keep the proper bookkeeping or even go out of their way to find a CPA that's really good and understands the business and is able to keep that proper record keeping for them. And so when you ask for these financials, you're not really able to understand them. And that is where I encourage a lot of other operators and even investors, if they're looking to do it on their own and they're not passively investing with us, to make sure that they look at other facilities, they look at other financials. And that way they can understand and have a better grasp of if that property is going to perform the way that they hope that it performs, and that you can have a more proper pro forma to be able to go off of. This takes time, and this is not something that you're going to be able to just do the first time around. You know, if you're looking to expand your portfolio, have multiple facilities, you're going to learn a lot from that very first one. You're most likely going to make some mistakes. You're most likely not going to have the numbers that you were hoping for. And regardless, though, that's where, you know, you want people who understand the business and understand the operation expenses. And at the end of the day, looking at multiple deals day in and day out really helps. And not everybody has that time. And that kind of segues to the next point. This is a full-time thing. So at the end of the day, I get asked quite often, is it worth doing? It absolutely is, but it definitely takes time and effort and dedication to be able to understand not just the business portion of this business, but also even just the investing side, the real estate side. It definitely takes a lot of time to understand what you're looking at. Just like anything else, anytime that you dedicate to something that you're passionate about, something that you're willing to do full time, that's what's going to help you really succeed. So if you're not looking to do this at all, like full time, and really dedicating time and energy and effort into it, you're not most likely going to benefit nearly as much from it, if at all. It's going to take a lot of dedication. And I don't mean to say that to sway people away from this, but I say that just out of the fact that I do put a lot of time into looking at a lot of these deals, looking at a lot of these business operations, it's what I do day in and day out. This is what I do. And so not only just from running my own facility and understanding my facility and how I operate mine, but even the ones that I've purchased with my business partners and what we've been doing on that end. But at the end of the day, it's what I do. And if you're not willing to do that, you're better off actually just passively investing with a group like ours, with Valley ALF Ventures, with people who do this full time, who understand this business inside and out, understand the acquisition side of things, and really have the expertise in it. Just like anybody else, if I were to go invest with another group or another thing, I'd want those operators or those people running that group to be fully dedicated and to understand, give me confidence that they're doing everything they can to make sure that they vet everything, that they do their due diligence, and trust, right? Trust is a big factor, and it's a big thing in this industry. So at the end of the day, as an operator, even just an investor, understand that, you know, if you're an operator and you are dedicating a lot of time to this, that's going to be great. That's going to really help you in the long run. And you're going to understand when you do start expanding what to look at, what to avoid, if a certain property is performing what it should be performing, and if it's worth pursuing. As an investor, the same thing. The same criteria actually applies to that as well. So at the end of the day, that is what I wanted to talk about. I wanted to make sure that you guys, if you're looking to do this, that you understand that. And hopefully this video kind of gave some clarity and some understanding and hopefully some better perspective of what to do going in if you're thinking of getting into the space and investing, whether as an investor or an operator. But at the end of the day, those are kind of the things I wanted to talk about. And with that being said, make sure to like, comment, and subscribe. Make sure to go watch all these other videos that are posted up top. And with that being said, I will talk to you all in the next one. God bless.